What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the people's champion of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends,
I just wanted to say hi. He does exist. I'm back. Color's weird here. We don't really have to worry about that right now, though, because we got a new setup coming. Pretend I'm wearing something else. I'll cover that. Got a new setup coming in the other room. It's going to be on and popping. Just wanted to pop my face in, say hello. Don't worry about the color. I mean, the color's actually okay here, but it's not likely that I'm going to be doing a lot of stuff from here. It's going to be in my other little studio that I'm going to have going on over there. But just wanted to say hi here at the new place. A little different look. Still got a bare wall, but there's no kitchen behind me, so it's a little bit different. But we're going to be probably doing stuff from the green screen in the other room when it comes, soon. So, there you go. All right, now let me take my ugly mug back off of the screen, get back to business.
all right, guys. So, Pando, I know, right? I actually do have an okay tan right now. It's just the camera kind of auto adjusts for the light, and that's what happens. So there's that. What else? So much to talk about. So much to say. PJ, how you doing? Trevor, Bruno. What do I want to say? Dr. Paul back in the building. Yeah, guys, so I'm in the new place, so this is exciting. And everything is slowly kind of coming together, which is good. Hopefully next week the rest of it will be here. I got a Manfrotto tripod coming up in the world, thanks to a generous donation. Then I have a capture card coming, so I can be fancy with my Nikon, D5500 that we have. We're going to use that. And then a green screen setup, so much to the chagrin of my girlfriend, I told her, hey man, I'm going to have another room. I'm not going to put my desk in it. It's only going to be for production. And she's like, okay. So all my stuff is still in the living room. But look, we don't have anything in the living room. Okay, so we have a couch. We don't have like a big TV yet. We're working on it, right? We need a big TV here. I'm just so I don't really watch TV, right? So I just use it for, I guess, my NBA League Pass. I'll put it up there, but I'm not one of those guys that sits around and watches TV. I don't know. I like to be active and think about things. I can't just watch things and just drool. I get restless. I don't know what it is. I just can't. Anywho, so we're going to do all that. Everything's going to be great. It's going to be fantastic. It's really cool. We get the attached garage. My girl parks in that one, and I've got one right across, which is very close. So everything's cool. So far, so good. Got it on and popping. There's everything around here imaginable. Yeah, except for the beach. So I do miss the beach. But whatever. It is what it is. All right, so we're gonna get to this here in a second. Somebody just knock on my door? Anyway. If they did, they have to wait. I'm not stopping my stream for somebody knocking on my stupid door. So, what we got going on here is AMD. Now, let's kick this off like this, okay? So, as always, price consensus, EPS to price chart. I'm going to throw out a quick disclaimer here, actually, okay? Option trades, okay, around earnings are very risky, right? But you're all here because you want to hear about options trades around the very risky time of earnings, right? Okay. So if you're going to hang out in the chat room, realize that's what we're going to talk about, all right? And if you don't want to hear about it, don't come into the chat room and don't watch the videos. No skin off of you know what. There's my disclaimer. That's my very calm disclaimer. I was fired up yesterday, but this morning, it's a bright day, feeling good. I'm going to hop in the vet, go get lunch somewhere, not have to worry about saltiness. So it'll be good. All right, back to business. Price consensus CPS surprise chart. Black line corresponds to right y-axis, which is price. Left y-axis is earnings. Corresponds to these multicolored lines, which represent the evolution of our Zacks consensus estimates over time. The green arrows are earnings beats. The red arrows, earnings misses. Look at this. Well, I guess I overkicked my coverage there, but look at that. Very disappointing for AMD. Into 2014, 2015, 2016, right before people started going, wait a minute, crypto, right? We can use these AMD cards for crypto and make money. That's part of it, okay? The other part of it is, AMD's new chips. So you got, what are they, the Ryzen? I think there's a Z in there. Where's Jeff? He was in the chat earlier. I think it's Ryzen. Pando, you know what it is. Ryzen with a Z. I think so. They had new chips. Now, here's the interesting part. Heading into yesterday, there was a report. Was it Goldman or Citi? It was somebody big saying that Intel is going to come in with some new chips that are just going to destroy AMD. Right? They're going to kill them. What is this, like 1999? Where we're talking about Intel coming in with a chip that's going to kill AMD? I mean, haven't they been at each other's throats for the last 20 years? Is this something we already know? I don't get it. And shouldn't Intel have like a vast inventory of chips that they could just drop on AMD at any time? So the whole AMD thing was just AMD was going to be cheaper, the cheaper alternative, and then Intel is going to be more expensive. Anyway, back to this price consensus EPS surprise chart. Clearly see the trough, and then now it's a brave new world for AMD. But here's the problem. AMD's management, okay? I blame them for this kind of stuff happening, right? Smooth it out. Set some expectations. Just smooth it out. Not this choppy back and forth of what the... Nobody knows what's going on here. That's why the stock chops back and forth. And you guys remember last quarter, I think it was a bullish, we had a bull debit on it. And in after hours, it went bananas. And then the next day, it came crashing down. I don't think that was this, though. This is March. It's probably closer to, I don't know. They didn't put the thing in here. We got all sorts of data problems happening over here. Like, why isn't this over here? We're going to have to lean on our G14 classified stuff to dig in here a little bit more, but we will. That's what we do. Now, AMD's bouncing back from yesterday, and we'll look at this when we look at the stock chart. We'll do some chart analysis for you. Which, hey, if you don't want to make options trades, which I'm not telling you to make options trades, it's giving you choices. If you don't want to make options trades, maybe you could take away a little something from the chart analysis. Maybe the chart analysis warrants the $0 that you got to pay to be here now. Maybe. All right. So AMD. Right now, this industry is in the bottom 39% of our Zacks industry rank, and they lump them in with the semis. They're going to report after the bell today. That's right. All you have is the rest of the trading day today. That's why we did this at 11 o'clock Central. Then I get my coffee in me, run around a little bit, figure out what to do. Let's get down to these sales estimates. It's all about the revenues, folks. Look at the revenues. Year over year, 15.57% for the current quarter, 19.52% for next quarter. Current year looks like 1863. Next year, 1235. So they're still looking at some decent revenue growth over the course of the next year or so. Translate that on over to EPS, and it's fantastico. Look at this. Current quarter EPS, 153% for the current quarter. Look at next quarter, 533%. Current year, 173%. Next year, 209%. Now, granted, this would be much more impressive if we weren't talking about 8 cents, 4 cents, 10 cents, 32 cents, right? It would be much more impressive if these were larger numbers in terms of percentage growth year over year. But the analysts really got emboldened 60 days ago when you had 5 analysts come out and increase their estimates for the current quarter, 5 for next quarter, 6 for the current year, and 2 for next year. So a lot of that bullish behavior a couple months ago. Probably pretty much immediately following our last report. And over that same period, you do have one brave soul that came out and said, I'm going to drop my estimates for the current quarter. Although they probably didn't drop them too much, because if you take a look at our Zacks consensus estimates, current year trend's gone from 7 cents up to 8 cents. Current quarter. Next quarter's gone from 4 cents, stuck at 4. Current year stuck at 10. Next year's gone from 30 to 32. So that's why, my friends, despite having 5, 6 analysts increasing their estimates for the current quarter, next quarter, current year, still is Zacks ranked number 3, because the actual magnitude of this move is minuscule. A penny here, a couple pennies there, that's nothing, okay? And we see the surprises, right? Nah. Now here, guys, nah. When you see nah, it's not always because the data is wrong. It's literally the estimate could have been them to break even, and then of course you can't divide by 0. It's undefined, so that's the problem that we're having here, okay? Just a little fun with math. And you can see here this sort of the move, 60 days ago that happened. So you got KeyBank coming in, dropping their current quarter number. And then you have Oppenheimer. They must have moved a different number here, because this is nothing, right? All right. Let's go ahead and look at the stock chart here. An interesting thing is happening to AMD. For you guys that don't believe in the 200-day moving average, how many times do you have to see a stock bounce off of it to start going, you know what, maybe people do pay attention to this 200-day moving average, right? So you got the fierce move, very toppy. But you guys notice this little wedge that's developing here? So these higher lows, in this case, supported by the 200-day, wedging up underneath those 52-week highs. Now, I'm a big fan of this volume at price indicator, and just look at how much volume. And you could do this on a comparative basis, right? You can compare this volume here to this volume here, absolutely. But here's the thing that you got to think about too. The nominal value of the volume down here pales in comparison to the nominal value of the volume up here. Think about it. 1 million shares at $7 is 7 million. Okay? Whereas 1 million shares at 14 is 14 million. So now if it's 2 million, and I'm just throwing these numbers out, guys. These are kind of relative. We don't actually have a scale going horizontally that will tell us specifically what these are, but you can kind of gauge. You can basically say that the action up here is probably 4 times the amount of the action that's down here, right? Twice the price and pretty much twice the volume, okay? So there's a lot of money chopping through AMD in this range. That means that a lot of people have been coming in and dumping it here ahead of the highs. And a lot of people have come in and been buying it too. So there is a debate raging on the street. Overall, though, bullish chart, right? Not only are you above the 200-day and have found support, leapfrog the 50-day. Now the 50-day is starting to move away from the 200-day as the stock starts to appreciate. And then here's that, what I was talking to you guys about. We were there live. We remember this, right? Overnight, following the earnings report, we had that huge spike up, gapped up at the open, and basically sold off the rest of the time to the 200-day moving average. The whole time. The whole time. But I do like the little wedge you're putting in here. Look at the commodity channel index. I like when this comes down near the zero line and bounces. That's one of my favorite moves. One of my favorite things to see. It's a continuation pattern that happens when stocks are close to their 52-week highs. I've seen it 100 times. One of my favorite things to trade in Momentum Trader. Because oftentimes you don't get the storybook retrace, right? Oftentimes you don't get the move here and then it's going to come exactly, 61.8% and then it's going to go higher. Sometimes you just get this little sort of hiccup back where it was oversold and now it retreats a little bit and it gives you another chance to get in. And that's one of my favorite patterns to play. But again, guys, you got to take this and say, okay, this is a chart heading into earnings. One of the things that can change the future of a company, so to speak, is that earnings report, okay? So earnings can break through resistance levels, break through support levels, but that doesn't mean that you should ignore these levels altogether. So where's the 200-day for us? Right now, the 200-day is at 1278. So $1.52. How much you guys want to bet? I bet you it's more than $1.52. Our implied volatility when we do this. I bet you it's a little bit more than that. But watch. And then the highs here, 52-week highs, 1555, no, 1565, which is $1.35 to the upside. All right, bar chart. We're going to look at bar chart, and then we're going to pull up. Mr. Wallace, how you doing? We're going to look at bar chart, then we're going to go back to my little G14 classified thing. 1430, let's use this. And again, we can use the front week here. So let's just use the 1450s. Of course. Of course, gents. Of course. At the money call, 59 by 60, we'll call it 60. At the money put, 82 by 83, we'll call it 82. 142. So right in between that 130 to the upside and the 152 to the downside is 142, pretty much. And that's what they're cluing in on earnings here. Makes a lot of sense, right? 200-day providing support to the downside, 52-week high providing resistance to the upside, and that's basically where they're trying to peg AMD here on earnings. Okay. Now, let's look at some valuation stuff. Oh, I'm back on pets. Forget pets. I'm going to talk about pets before we leave, by the way. Let's look at price to sales. Give me a second. Let me pull this pets off. Let's get this pets out of here. Back to the AMD. Okay, now, this is good because we've got this going all the way back 10 years, 2007, and here we can see different valuations on AMD, and this is in their price to sales. Trailing 12 price to sales. The white line up here, this is the S&P 500. Bottom line is AMD. So, for those of you worried, at least just from a sales perspective, about the run in AMD, really it just came up to where the S&P 500 is. Okay? It's about 3 times price of sales where the S&P is. Now, I know you can make the argument, maybe that's not a good benchmark, but just to give you some perspective, guys. So right now we're at 2.35 times sales, while the S&P is a little over 3. And again, we can change this. Who wants to guess the ticker? I'm going to type. We can do 2 of them. First, let's do NVIDIA. Look at a couple of their peers here. Oh, Nvidia looks expensive there, doesn't it? Don't go jumping out and, jumping ship just yet, though. We're going to explore a couple more things. We're going to look back at that revenue growth because that can justify this multiple. But anyway, 2.3. Okay. But now let's look at a more stale sort of company. Intel. More stable, not stale. Same thing. Look, Intel 3 times. So AMD at 2.3 times sales maybe isn't a terrible thing. Maybe still undervalued even, you could argue. Now let's look at forward PE. Here's where it gets out of whack, right? And this is because of AMD's spotty earnings history, okay? So now it's starting to make sense. Because AMD's just chopping all over the place. I mean, look at this. You got, we'll just use the median. Negative. Here in 2010, oh, finally 13 times. Started looking good. Then you went negative again. Then we're 24 times. Now we're negative again. Now it's 78 times. So it just whips around. So I don't know how many people are going to be looking at AMD on a PE basis, at least a forward PE basis. Or a trailing PE. What is it? Who cares? Insert PE here. It doesn't matter. And again, let's compare that to NVIDIA. And you do see the richness of the valuation of NVIDIA. But again, probably more solid in terms of growth numbers there. Let's get back to these revenues. Because this is where you got to look. With AMD trading 2.3 times sales. Are they set to grow these? Look at the nasty year of 2015. Just woof. And then you got 7%, 18, 12. But if you notice, my friends, 2014, you were making $5.5 billion. Heck, in 2012, you were making 5.42. 2011, you're making 6.5. And now you're talking about getting back to 5 billion this year, hopefully 5.6 billion next year. So I think here, when you really look at these numbers, now you understand the plight of the AMD shareholder, where you're not quite sure which AMD is going to show up. And it's this inconsistency that's leading to a stock chart that's choppy. And, you look at this as a long-term investor, hey, man, I would have been fine. Just bought there. If I bought at the 200 day, if I bought, what it could have, should have, we're not buying it. We're not in that time machine. Okay, so back the DeLorean up. We're here. We're trying to figure out now, should we play these earnings? Should we mess around with this bad boy? But should be comforted by the recent move to the upside. The thing is that just as this report last time, just so frustrating. Huge spike up, and then now we're just coming under pressure. Just want to check in with the Qs real quick. That's right, the NASDAQ. The NASDAQ? Yeah, the NASDAQ. Just curious as to what's happening over there. The Dow still leading the way today, of course. So this is the type of market we're in. You have to take the market into consideration too. I came into this earnings season expecting companies to get crushed if there was any inkling that there was some weakness. But that hasn't been happening here early on. It's been the opposite. It's if there's any glimmer of hope, these stocks are rallying. Early on, right? Early on. Keep that in mind. All right, let's get back to, where am I? I got too many windows open. There we go. All right. Back here. So, we'll get back to this front week, guys. Get back to this front week. But let's get out to the monthly to the stacked. And we said the market was pricing. So the all-time highs, basically what, 1560? So basically out here is where the all-time highs are. Anything beyond that, it's a breakout from the highs. Look at how they're still getting, somebody's paying, they're still paying all the way out here. Oh, the other thing too, did you guys watch the little video I posted yesterday? I tweeted it out of some bullish behavior in the options markets for AMD. It was like 2-to-1 calls to puts, I think, were being traded yesterday. A little bit of bullish activity. Okay. So you do obviously have that Intel news, force the stock down a little bit. These guys, this is the type, with the stock trading down at 14, this is the type of setup that I look for when we're going to go with our bullish and bearish debits. Because selling premium out here is just not attractive to me right now. What you're going to be able to get, sort of risk versus reward wise, may not be there. Whereas you're going to pay a little bit to get a lot of exposure. So we said that the market was saying what, 1550s pretty much. I'm going to pull my little trick here, guys. You know me. I like the halvesy. I've done this before 100 times, where I'll say, okay, if the market's pricing in here, then I'll kind of go a little half between, right? But we're still in between here anyway, because we're 30 cents off of this. 1430 is where the stock's trading. So I don't want to get too cute with this. Looking at the out of the money is going to give you a little bit more bang for your buck, but you're going to get a higher probability of success by buying the one that's a little bit in the money. And this is on the bullish side. And I'm going to say you just go all of it. So Jerry, in terms of ESP, it is a good indicator of whether or not the stock is likely to beat earnings for that quarter. It's a very good indicator of whether or not the stock is likely to beat for that quarter. What ESP is essentially we're looking at whichever analysts made the last move, right? The last estimate. Because think about it. Analysts are out here in order to set these expectations for these companies so that they will beat those numbers so that the analysts looks good, pretty much, right? Like, I think the performance of this company is going to do well, and I'm very confident in this, so I will go away from the crowd. Let's say the rest of the crowd's at 10 cents. I'm going to say 12 cents because I'm very confident in this company, and I'd like to be compensated for being so right, right? That's what the analysts are motivated to do. So if you're going to move your earnings estimate that close to earnings, you better have a it's like pretty darn good reason. It's in our copy that we write for this. It's like a darn good reason for it. So you have to be very bold. Like, you have to have a lot of reasons to do that. Otherwise, you wouldn't do it. You would just stay with the rest of the crowd. Whatever happens, happens. So when we see an analyst emboldened making a move like that, historically, that means that something good's going to happen. Okay? So you got to do that. But again, that's only telling you about this quarter. It doesn't tell you about what the prospects are or what the forecast is going to be, the guidance for the next quarter. And oftentimes, that is the principal reason for the movement in these stocks. It's not what happened this quarter. It's what are you looking at next quarter. All right. So I think you got to be aggressive. The aggressor this quarter, I think, is going to win. if you're long the 14 call, this is out to November 17th. It's going to cost you 102. The $15.50 call, 45 cents that you're going to give back. Right? So in this case, 57 cents is what this is going to cost. Difference in the strike price, 150 minus the 57, it's 93 cents. Divided by the 57, 163% potential rate of return. Jerry, I don't want to leave you hanging. Negative 4.9% today, right? Okay. Now, on a stock like AMD, where you're expecting 10 cents, 8 cents, what was it, 8 cents for the quarter? Expecting 8 cents. So, a 1 penny move by one guy, and I'm not going to get into the actual calculation of the ESP, but overall, this is kind of just, right? This is the same as dropping your estimate by 12.5%, right? So, I guess the other caveat here is I place more stress on this when we're talking about significant dollar amounts, not 8 cents to 1 cent. It skews it because percentage-wise, it makes it look so crazy. All right, so there's my... And also, I think ESP in the positive direction makes more of an impact than ESP in the negative direction. That's a whole other video. So here on the call spread, the 14, 15, 50 call spread, you can make 93 on 57, potential 163% return here. So this is a bull debit. Long, November 17th, 14, 15, 50 call spread for a 57-cent net debit. Very inexpensive way to play this, okay? Very inexpensive, gives you some upside potential. Now I want to draw the exact parallel. Ha, Jeff, welcome. Now compare this, guys, to, let's say you're bullish on AMD and you go, okay, I want to buy AMD. I'll buy 100 shares, right? Because that's the exposure that you're getting by buying the $14 call. You buy one call, you're getting 100 shares. It's going to cost you $1,430, okay? So if you lost how do you lose $57 on $14.31? Stock's got to move barely at all. And you're going to lose your 57 bucks, right? If it moves more than this, then now you're going to lose more than this, okay? So, for example, let's say AMD is trading at $14.30, right? And then the report comes in and they lose 10%. Stock gets crushed. All of a sudden, you lost $143 or 12, and you only got $12.87 left. Versus if you would have just bought the call spread, you're only going to lose $57, okay? So this is a way to lower your risk trading ahead of earnings, okay? These are all ways to drop your risk. And if this is too risky for you, then don't trade it. Don't trade it. Don't trade options with your rent money. This is not a long-term investing strategy. This is trading. I'm giving a lot of these disclosures today. I'm just fired up. Now the bottom end of this, let me pull this up again for the Bears. Bears 200-day was what? 1278. That's what I'm going to use, I think, for this. 1278 puts it here. So you could go all the way down to 13 with no remorse. So a retrace to the 200-day gets you paid if you're a bear. It is the casino, Jeff. Absolutely it is. 1250 put, 101. That's how much it would cost you to go long to 1250 put. I mean, 1450. Jeez, I used to remember what numbers look like. 1450. That's definitely a 4. 1450 is going to cost you 101. Okay? Now, you could just buy this put outright. But if you think that that 200 day is going to provide support and it's not going to dip down below there, then why not sell a put close to that level so you get back, you recoup a few of those bucks. That way, come on, bar chart. That way it's not going to cost you 101. But instead, we're going to get back to this. So 1450 costs you 101. You could sell the 13 put and get back 35 cents of that. So you get back a few bucks, which is a good thing. So subtract 35 cents, which you're going to get for selling that $13 put. You're going to get 66 cents as your overall net debit. Difference in the strike price, $1.50 minus that 66 cents. That's $84. Holler, my friends. So you can make 84 on 66 or 127%, my friends. Okay, so bear debit is long the November 17th, 1450, $13 put spread for 66-cent net debit. Okay. Now, in terms of credit spreads here, I don't want to mess with them. I just don't want to mess with them at all in this case. For me personally, the risk reward isn't attractive enough. And I think that the thing moves. Why do I think it moves? Well, let's look at what it's done. What am I doing here? There we go. Let's look at what it's done on earnings over the last several reports here. Now, this is 2 days before to 2 days after. Look at March 2017 and negative 22. December 16 at 13%. March of 2016. Now, we're not going to see a 47% move in AMD. It's not going to happen. But that's pretty significant. And the other thing I want to point out is this March and this June. This June looks like it's not a lot because that's because all the action happened after that. That post-earnings drift, my friends. And we saw that because we saw it here. We remember it. Look at these moves following earnings. And this came crashing down. All over the place. So Kai Anthony, you're gonna put a short strangle on if you think that the market's not gonna move as much as AMD is pricing in. So if you believe that this 200-day and this all-time high, or not all, is this an all-time? I don't even know. I don't think this is an all-time high. 52-week high is going to contain this. Then go ahead. I don't think it's going to contain it, though. I don't think so. The way this thing's been wedging up, and all they got to do is, give us some good news. Plus, there's short sellers out there, right? The big short report, people are getting short now, so they could be in trouble. So what I think is going to happen right now here, guys, is on a bad report, shorts are going to pummel this thing. They're going to pummel it. They're going to absolutely crush, destroy, maim, slaughter, pillage. Absolutely. Because they're already primed for it. They're waiting for it. And they may do it again even on a spike up through new 52-week highs. But I think there's enough shorts on the table They'd have to run for the exits a little bit because there's a few bold ones doing this ahead of the report. Um, but there's a lot of market out there. There's a huge market for crypto stuff, for graphic stuff, for regular desktop processing stuff. So AMD coming out with one chip isn't gonna crush. I mean, Intel coming out with one chip is not gonna make or break this thing. Just not. Lottos, absolutely. Let's talk lottos. Front week. Yeah, Jeff, I think that's going to be the setup. See what happens after, and if it's a bad report, they're going to pummel it, and you guys should jump on board and put your heel into their throat. That's a big if, though. Yeah, right? It's all taken just by one company. All of it. There's no room for anybody else. $14.30s. So, what's the lotto scenario, guys? The lotto scenario is that they blow out earnings and just go off to the races. And I think that puts that 15 call as the ticket. Because if it blows through new all-time highs or new highs, it'll be in the 16s, 17s, no problem. And look, there are still people paying for these. It's out there. But a big move. We've seen 20% moves before in AMD, right? You've seen it. I think after hours last time is what we got. So stock at 14.30. If we get a 20% move, that's 17s. I think the 15 call is the lotto. So I'm going to say lotto. October 27th. $15 call for 41 or whatever it is. 41, 42, 45. Because again, guys, this isn't real time. So this is my suggestion. If you are messing around with this, wait till towards the end of the day and put it on. And just go kind of out of the money and find where that sweet spot is. Okay? Because why are you paying for today's time value? No reason. Just wait. Okay? Or, again, this is not a long-term investing strategy. This is risky business. But you can use all of this analysis to decide if you want to become a long-term shareholder of AMD. Right? Right now, I'd like to see how this report goes. I think this is a major, this is a big quarter for AMD to give us some direction and address the situations at hand. Address some of the negativity out there. All right? All right. Well, that's all I got for you here today. Wow, that was a long one. Holy smokes. But that's all I got. So, yeah, see, there you go. Dr. Paul hit the head. The last 3 minutes of trading, looking for best price in lottos. Maybe a little bit longer than 3, right? Maybe a little bit longer than 3 minutes. Just depending on your, because you might not get filled, and then you're going back and forth and freaking out. But you got the right idea. Towards the end of the day, is fine. Now again, guys, Mr. Wallace, would I consider a straddle? Yeah, I'd consider a straddle. Official trade, Bruno. Official trade that pays is the bull debit. The bull debit. The bearish trades haven't worked, really. It's the bullish trades that have worked. And, the market's looking good, but this thing could be giving us the biggest head fake of all time. But I do like how that 200-day keeps getting supported. But Bruno, I do think that after think after earnings, you got to pay attention because I think there's going to be another trade after earnings on AMD that's going to develop, and it may be on the bearish side. Very well, may be. So keep an eye out for that. Join us in the chat room, my friends. Discord, it's popping up here on the bottom. It's got a bunch of letters. There's a little P, a big B, W, C, M, a little S, and a G. I'd like to get a little nicer version of that. Don't come in there being negative. Like, I will boot you. I really will. I'm not there for that. I'm there for sunshine and lollipops. If you want to heckle me, I can give you my street address. You can come on down. I'm not there to be heckled, man. I'm just not. Shoot me those emails, livetrader at zax.com for, yeah, I agree, Dr. Paul. Last season was way too bearish. Everything we touched was just crumbling in front of us. Shoot me those emails, livetrader at zax.com if you want to get on the distribution list. And we'll go from there. All right, guys? So thanks so much for hanging out with me here today on Zach's Live Trader. I will be in the chat room later. And tomorrow, we've got Alphabet, that's right, Google, at 1 p.m. Central Time. So you don't want to miss that. That's all I got for you here today on Zach's Live Trader. I will see you all in a bit. Have a good one, folks. Thanks so much for coming out.